Hello everyone and welcome to today's morning report on Friday the 25th of September with me, Rich Perry, market analyst at Hantec Markets. The European trading session, very strong start, and that's come on the back of these Yellen comments last night. She gave a speech at the in Massachusetts, and she's sort of calmed sentiment fairly significantly. Actually, she's sort of gone further to clarify sort of the Fed's position. Didn't seem as though during that Fed statement or even her press conference last week that the Fed was overly positive, and she's now sort of given a speech yesterday saying that most of the FOMC are really looking for or seeing a rate hike being appropriate in 2015, and that sort of brings back a December hike pretty much squarely back into focus, and sort of now suggests that perhaps some of the negativity that was surrounding that FOMC press conference and statement had been overdone, and markets are strongly reacting higher today. European markets, FTSE up 2.3%, DAX up 2.8% as we speak. So certainly a significant rebound going on here, and that has certainly influenced sentiment by those comments. Also, the dollar has had a significant rally on that move. Let me show you the dollar index, or trade-weighted dollar, back higher again, back above that big pivot band that I've been talking about, 96.30, and you can see here that the 2-year Treasury yield has reacted positively higher. 10-year not massively moved, but still it has started to push higher again. So it is certainly seeing as an impact on the markets, and expectations of that rate hike in 2015 have certainly sort of improved somewhat. So certainly you would argue that markets are fairly positive today. You've also got a fairly decent sort of move on the oil price, about 0.6% higher on WTI. That would help to settle sentiment as well. So generally all round good trading conditions set up for today. How long that lasts for remains to be seen. Certainly if recent days are anything to go by, any sort of strong moves are subsequently retraced in following trading sessions, but we'll wait and see how that plays out. But still, at the moment, the market sentiment is positive. In terms of what we've got to look forward to today, we've had Japanese inflation out overnight, actually, down 0.1% on the core data. Now that is Japan falling back into deflation, and that is sort of means that speculation over whether Japan will be going towards further easing of monetary policy, perhaps even as early as October, as the sort of as a combat of that fall into deflation. That could be seen, and that's sort of weighing on the yen as well, and also helped to support Japanese stocks overnight. But certainly the focus for today is the US GDP. Final reading of GDP for Q2. Now, the second reading of GDP, or preliminary GDP, came out at 3.7%, so a strong number there, and the expectation is 3.7 again. This is that's the final reading of Q1 GDP, which was 0.2% negative. Then we have at 3 o'clock the Michigan sentiment, final reading of Michigan sentiment. Actually, the flash reading was at 85.7, or preliminary reading, whichever way you want to call it, 85.7. It's expected to come in at 86.7, so slight improvement on that prelim reading, but certainly still a 10-month low, that would be. So still the sentiment gauges in the US are not all that positive, and maybe they are sort of already reacting to the possibility of a rate hike. But those are the two bits of data out today. Now that takes me to my chart of the day, which is the euro sterling. Now euro sterling has been in this range for several weeks really, and every time it gets towards 73.90, that is a massive overhead resistance. 74.82 is the sort of ultimate resistance, but obviously every time it gets towards 73.90 it backs away, and throughout this range. And again, 74.10 was the overnight high, and or yesterday's high, before pulling back into the range again. So playing the range, and today we've had a correction on the euro, and selling pressure coming through. So selling pressure coming through on this euro sterling chart, pulling lower. Here we see on the hourly chart, sharp correction. This is that range across the weeks. And I think now, having broken below the initial support which we saw here coming in at 73.15 area, having broken below that, the resistance, that's sort of now turns into resistance, but also up at 73.50. These are the two levels that you need to watch for. I think you're selling into strength now on this near-term chart. Breaking below that support sort of now turns the sentiment negative. These momentum indicators are certainly looking corrective, interestingly, near-term anyway. And I think we're just going to play out this range, generally speaking. I think we're going to see a move probably back towards that 72.40 level, which is the sort of initial key level of the range. Obviously the spike low, or the sharp low, came at 71.95, but 72.40 seems to be a level. 72.60 also was a bit of a supportive element. Here you can see captured some lows and also range slight rebound highs as well. So 72.60 could be an initial support as well, but I think 72.40 is the sort of where the range support starts to come in. And I think we could see a retreat back towards there as we sort of continue to play out this range on euro sterling. So I wish you good luck in your trading today, and I will speak to you later.